My name is Will from KOSEC Kodari Securities, and today I'm going to be talking to you about the Relative Strength Index, which is a technical indicator used by professional investors and the team here at KOSEC to time entry and exit points in and out of stocks and other investments. Used correctly, this indicator can help you maximize profits and minimize risks with your own investments. Again, why is it important to use technical indicators? We get to understand market conditions, we get to find areas of value based on past price movement, as well as time entry and exit triggers. The RSI, or Relative Strength Index, is a great indicator for those investors who want to highlight a stock that is indicating an abnormal amount of selling pressure and has become oversold. For a lot of investments, this will mean that the stock is very low, and it could allow an investor to pick the stock near the bottom of its range. The aim for any investor is always to buy a stock low and sell it high, as in also to avoid catching a falling knife.
As always, any information given is general in nature and it does not take into account your personal needs or objectives. For further information, please visit our website, www.kosec.com.au. So what are we going to be going through today? Well, a couple of things we're going to be talking about is what is a relative strength index? How is it used? What are some well-known practical examples? And then how can we combine it with other indicators to help get a little bit more of an accurate reading on when we should buy and sell businesses? So what is a relative strength index? The indicator was originally developed by J. Wells Wilder Jr. and was first published in his 1978 book, New Concepts in Technical Trading Systems. Essentially, the RSI is plotted on a scale of 0 to 100. Traditionally, if a stock is trading above 70, it is considered overbought, and if it is below 30, it is considered to be oversold. Now, ideally, you'd want to be looking to buy stocks that are trading below 30, so the ones that are oversold, and you want to be looking to sell stocks that are above 70. That's an indicator that potentially there's an abnormal amount of volume moving in either the positive or the negative direction. So let's take a look at the formula for the relative strength index. So working out the RSI is relatively straightforward, and there's actually two steps. Step one, we need to work out what the relative strength, that's known as the RS. So the RS, relative strength, is the average of a number of days closes up divided by the average of a number of days closes down. Once we've found that out, we can go into step two, which is indexing the RS on a scale of 100. So we go RSI equals 100, take away 100 divided by 1 plus the relative strength. Now, normal defaults are set to 14 days. You can actually alter the inputs on that to make your RSI read whichever default you'd like. However, most trading tools will have a relative strength index which is set to 14 days. Now, as always, any charts that we look at today will be done in the 1 year time frame. Each candlestick will represent 1 day, and the relative strength index will be set on the 14-day timescale. Now, normally when you're looking at charts, you'll actually see something along the lines of this. You might have the actual price action here in the middle, okay, and then maybe down here you might have a stochastic, moving average, and then above that you might have your relative strength index. So it's not going to be on its own, okay? You can see this is Northern Star. However, if we flip over to the next one, what I've actually done is I've actually enlarged it down here, zoomed in a little bit, so that we can have a better understanding of what we're looking at here. So as we can see, this is the top line here, okay, and that there is basically anything that is above the sort of the 70 mark. So this would be 70. Anything above that would be overbought. Now, down here we've got the 30. You can see that down here. Anything sort of below that is considered to be oversold. So at this point here, we could see that potentially this business is getting oversold. So it's moved into a negative direction. And as we can see, actually on the price action of the chart, it has indeed moved in a negative direction. This would indicate potentially a good buying opportunity. However, when it gets up to the top here, we can see that sometimes that represents a bit of a peak and then a drop off afterwards. So you can see how it sort of mimics what the price action is. Now, here's the trap for young players. What we need to be looking at is making sure that just because a stock is in overbought territory does not necessarily mean it might be an opportunity to sell. There are a lot of stocks that stay in overbought territory for a very long time, which is why it's always important to use the relative strength index in combination with other indicators. So let's take a look at our first practical example, and we're going to be using the stock BHP, ASX code BHP. Now, as we can see through here, there is a lot of movement in the stock, but as you can see, it is relatively sideways trending. I know it goes up and down, but essentially if it held that for a year, then our price is not going to be too different, and I think most people would agree with that. So what we're trying to do is identify when the stock is going to be moving in a positive direction, and then potentially how we can time that exit point so that we can avoid these big swings down. Now, as we can see, okay, we've started down here. We could put our buy sort of signal at about the halfway point, or potentially even wait for it to be quite oversold down here. It's moved into the positive direction, and as we can see, when it gets overbought and that trading above the 70 mark, it's a technical indication that potentially we might be looking for a bit of a reversal, very high on its range, and potentially we could see that moving down into a negative direction. Now, the idea with any savvy investor is we're trying to pick things up nice and low, so this would be an optimum point to look at potentially picking up the stock BHP. And as you can see, this is confirmed by our RSI, which is nice and low. Then it sort of moved up, traded sideways a little bit. Now, here's the trick. This is the point we would originally pick it up. Now, we see that exact same price action a little bit later. It's actually trading at the exact same price. But you can see that relative strength index is not considered to be oversold. It's not trading below 30. So it might or might not be a buy. What we do need to know, though, is with anything, an appreciation is a good sign. So we can see that this here is actually it's moving up. So the RSI is making higher highs, continuing to make higher highs, which is actually a good sign of momentum. And as you can see, this stock moving in a nice little direction. So you can see here how not only can the RSI be used to identify entry points and also exit points, but it can also be good to show momentum, higher highs along its price action. So let's take a look at our next example. Now this is Australia and New Zealand Bank, ticker code ANZ. As we can see, got some nice swings throughout here. At this point here, we've identified that potentially the relative strength index is getting very low, getting very close to being oversold. If we put our buy at this point here, and then we can see it moving into a positive direction, we could potentially look at exiting, locking in profit, okay, at that top. Once it's breached that top part of the relative strength index, you can see that over a year it does not breach it very often. So we could conclude that any time that it breaches it or even gets close to it could be potentially a time to maybe look at lightening or moving away to a better opportunity. As we can see here, this point here, we've actually traded into oversold territory, but here's another caveat here. This is another important thing to remember, is a stock can actually stay oversold for a very, very long time. I mean, we will look at many, many examples of stocks that have been downward trending for a very long time, and they are most of the time trading in oversold territory. And so we need to be very careful of that, potentially time your entry point when we actually start to come out of being oversold. So at this point here, and then moving back up again. And as you can see, this here, we could potentially place a sell at this point here, but it hasn't really breached it too much. But this one here is a very, very clear breaching of that top of the relative strength index. And we can see that the next movement for it is south. And our next example is the very famous Telstra, ASX code TLS. Now this is a business here that once again, we've seen it come all the way back down. Okay, at this point we're looking for a trend reversal. We're actually looking to pick this up, potentially not catching a falling knife, but what we're looking at doing is picking up a good company, potentially at a bit of a discount. So what we're looking for is the movement to get very, very close to its the bottom of its relative strength index. Now you can see over the span of a year, which is this one here, we can actually see that the stock does not go into oversold territory at any point except for right here at the very end. Okay, we need to take that into account. So if we're analyzing a chart, if we're looking at the charts for potential entry points, we need to take a look at that and think, right, It doesn't necessarily ever get oversold. What we're trying to look at is when it gets low on its range, getting close to that 30, which is at this point here. So we could be entry timing our potential entry point here. And as we can see, it's moved up, okay, in a positive direction, moved back down again. And then at this point here, it's become very, very overbought. Okay, well above that, the top of the relative strength index, and then from there we could see potentially it's moved back down. So we can see how timing our entry and exit points, certainly on Telstra, we could save ourselves from a bit of heartache by potentially getting out of businesses near the tops of their range and entering them in nice and low. So for our final example, let's see how we actually combine this with other technical indicators. Now, a savvy investor will always use multiple indicators, and they'll use the indicators that work well for them. So in the top here, we've got our price action, which is our candlesticks. We've also got our stochastic indicator, our MACD, bit of volume indicator, and then here near the top is our RSI. So we're going to work on how we can actually combine these together so that we can minimize risk as much as possible. Northern Star, the gold producer, is the ticker code for that is NST, and that is the example that we will be using today. So here we go. Now at this point here, we've identified the lows. Now what we want to do is go through over the entire year and we look at the points at which it gets quite low. Now Northern Star is a perfect example of something that might not, it lives in overbought, certainly a large chunk of the time, lives up there in the overbought territory. What we're looking for is potentially making higher highs or failing to take higher highs. So here we can see it's now been oversold at this point, trading just below the 30, okay? We're going to combine that with another indicator. So we've seen it being oversold. This is our next indicator that we're going to look at, which is a cross between the moving averages, the MACD. Okay, just through there. We've also seen a stochastic cross. We've seen the stochastic being appreciating or moving into a positive direction. From there, we can also see a cross of the center line of the Donchian channel. It has struck that top Donchian channel, and then we can see we've got all our confirmations in place, and we've got it moving into a positive direction. Now, at this point here, the stock does get overbought, and we can see the price action has moved up. But the thing that we say is it has continued to move in a positive direction afterwards. Now, that is sometimes the case. So what we will look for is another sell signal. So that's our first sell signal. But as we can see, the MACD is just sort of brushing. It actually hasn't been a cross, and there hasn't actually been a divergence of that cross, i.e. the cross hasn't been getting worse, okay? And the stochastic is still trading high. Also, the volume, as of yet, hasn't quite flipped into negative territory. It's gotten very light, but it hasn't flipped into negative territory. So even though our our RSI is saying sell, we need other confirmations from other indicators before we will actually lock in our profits or put that sell indicator there. That makes sense. However, let's look at another one through here. So at this point here, we've got it low on its range through here. We've been moving into a positive direction. And as we can see the first time, okay, we have got that overbought signal. Okay, we've still got a diverging MACD. It is starting to converge back through here. I suppose there is a little bit of a cross through there, but there hasn't been a cross where things have been moving apart. Okay, and as you can see, it's crossed back up again. Now it's gotten overbought. So let's look at what our real sell signals are going to be. Sell signal number one. It's now very high on its relative strength range. It is well above 70. You'll all agree with that one there. Okay. Next thing that's going to be coming is our MACD death cross or southern MACD cross. Our volume has switched into negative territory. All this is happening at around this sort of time frame. Our stochastic is moving down, depreciating stochastic, and we have seen our potential stop loss triggers or our potential sell signals as we have crossed over the center point of the Donchian channel. And you can see there the next movement for it is to be south.
So in summary, we've gone through today the Relative Strength Index, RSI. We've talked about how it's composed. We talked a little bit about the formula that comes in behind it and how it's used. Then we've gone through some well-known examples on the ASX 200, and then we've also looked at combining it with other indicators so that we can maximize those profits and minimize those risks. All this information was given to you by KOSEC, Kodari Securities. Thank you and have a nice day.